With world stock markets starting to dip, now is the perfect time to prepare your portfolio for the oncoming market selling. But which stocks will shine amidst the selling? Well, we answer all that and more, so strap in, because if you want the skills to beat the next market dip, you've come to the right place. This is Wealth Within's Hot Stock Tips, bringing you real strategies and over 20 years of experience training over 30,000 clients in the stock market. I'm Senior Analyst Philip Tortevsky, joined by Analyst Pedro Banales. Good morning, Pedro.
Good morning, Phil. What an interesting topic we have today.
Yep, we've got some amazing stocks to look out for, and it's all about protecting the portfolio as we enter this dip on our market. So let's go and take a quick look at the Ordinaries Index, Pedro, first up, to see what is happening. And I want to start here because obviously, we're looking at the market, and if I zoom in here on the weekly chart, you can clearly see the last 2 weeks have a very much seller intent going on. We've failed at the 9,000 level. We've tested it 3 weeks in a row, albeit slightly higher from each week up to the most recent last week, and we closed right near the low. Now, that's the second week of closing near the low, and to me, that spells sellers are coming in our market. So I expect this market to go for a bit of a dip. First port of call is around that 8,800, where we saw some really strong price agreements near that previous all-time high. If things get worse for me, I think a drop down to 8,600 is highly likely if we don't hold 8,800. And also, if you go on this monthly chart here and have a look, we've really, since COVID, been respecting this channel all the way up. You can clearly see, the major lows have come on this angle of rise. And most recently, we've come and hit or broken above the angle of rise to the upside now. So we are looking a little extended on the biggest picture time frame as well. So to me, we're quite due for a pullback. I just want to add one more thing, Pedro, before I get your thoughts, and that is the seasonality aspect of things. Now, this is the All Ords seasonality chart dating back from 1983 to 2025, and it gives us a really nice image of where things are or where we sit. And you can clearly see with the fantastic July we had, that was expected, because July is generally the best performing month on our index, but we're walking into the most bearish time from a seasonal perspective for the index. You see, August is not a hugely bullish month. In fact, to the downside more when you compare it to some of the other months. And we walk into September and October, which are traditionally the weakest months on our index. And it's not until November where we start to see that summer pick up again. So we relate that to the market, and we haven't seen a correction yet. We're well due to come into that seasonal correction before we hit the summer months. I've probably taken everything that needs to be said from this, so sorry, mate, but anything else you want to add?
Yeah, sure. Well, I do agree that the market seems a little bit heated, and it is due for a bit of a pullback at least. I wouldn't say a full-blown market crash, but a bit of a pullback. And now I'll just quickly highlight on the chart here, on the monthly chart that I've got. In times like this, it's good to have a look at the overall perspective of the market. You can see that since the low there in the 1980s, our market has really been following this overall long-term momentum that I've drawn here with the blue line. And you can see at this peak here in 1987, we were above that momentum by around that 93%. And then we had that GFC high, and we were above the momentum about that 63%. Right now, we are above that momentum line. We are at around that 26% level. So I don't think it's full-blown, markets overheating. We're about to witness a crash, but we could see a bit of a pullback, at least to retest that momentum. If not, just a little bit of a pullback before we continue on. But eventually, the market will come back to that momentum, in the long to super long period.
Yeah, fantastic. All right, now let's get into these three major stocks that do have the potential to protect your portfolio once we do see that dip come on our market. So time to move on to our first stock, which is Bluescope Steel. And now this one's come out with some big news circling it today, Pedro. And I want to bring that up because Bluescope leads the global push for the Whyalla Steelworks site. Now, what's happened is Bluescope's come out and it's going to head an international consortium along with a Japanese group, Nippon Steel Corporation, in a joint venture to pick up this new site that has the potential, if you read on down, to provide basically iron at a much, and I'll get to the exact area of it. And if you can see down here, it's got the Waihala site is basically a prime location for producing lower emission iron for both domestic and export markets, totaling to about that $1.9 billion. So it's quite a big site, big opportunity, and what we're seeing on the chart, I think, is the most exciting part, because especially now, coming into this dip, if we do see some companies ramping up or getting some nice benefits with them, you can be, often these are the times where they get, picked up amidst the selling, right? So maybe you can start us off and have a look at the chart of Bluescope, Pedro, and give us your thoughts on where you see things, and maybe, a bit of a comment on what the recent development is there and how that bodes for the company.
Yeah, well, we know that they're well diversified in the US, so they're beating the tariffs in that sense. And if things start to pick up here in the iron ore segment in Australia, that actually does bode very well for Bluescope as well, especially since it's green iron, which is becoming more and more popular. Now, on the chart here, I would say one thing, $26. That $26 is going to be the make or break. We can see all the way back here, and I'll expand out the monthly. It has acted as a very strong level ever since back in 2006. I lost for words there. So multiple times, in 2021 and 2025, it has hit its head at that $26 level. If it can break past it, then I think we are heading to that, those higher levels there, maybe possibly retesting that $42 level, I would say, is the next one to watch out for. And it does seem to move in those $3 increments. So that would actually go in line with that. So support, we've got $22. Really, it could be range bound, but when it gets to that momentum line is where it's going to be the most critical. Because if it does break below it, then we could be seeing the price head down to those $18 levels. But there's a strong possibility and probability, I would say, that it does find support. The stock has been held up quite nicely. It hasn't actually been falling much like the other material plays, especially in the iron ore sector, which, it's been heavily scrutinized, recently because of tariffs and China slowing down and all of that. So it's holding up. This is a monthly chart. It's looking good. The weekly chart, we've got a nice little uptrend there. I think that if it does find some support around that $22, trades back up, it could provide a good short to medium-term trade and even a long-term trade if you can stick with it.
Yeah, and for me, it's really, you just nailed it. It's the way it's holding up compared to a lot of its counterparts in this space. I mean, if we go to my chart there and take a look, you can clearly see, that 22, I'm with you, $22 is so important right now. That'll really give the really strong indication. If we're bullish, we should hold these levels in the near term and run to 25, 26. And then, boy, keep your eye close on it, as you said. If it breaks through this 25 level, then this one really looks like it's ready to bust out and expand. On the monthly chart, it's evident. It's compressing right now. So one to definitely watch. But next up is Beach Energy. Now, this one brought in some very strong results today. And as you can see here, Beach Energy had a huge year of production, which jumped 9%. Sales were up 16% and profits were up 32%. Pedro, they're also paying a record 9-cent dividend. And next year is shaping up for an even bigger year with the Waitsia gas plant coming online. So they've kicked a lot of goals today, Beach Petroleum. And to me, that is, really what is so exciting right now. Yes, they had a bit of a horrible week last week with the share price dumping all the way down to that 112 level. But that's a level to me that I want to mark out, because at around $1.04, you can even push it up to around $1.12. It has been so much support in history, and I'll bring the monthly chart out here. This one, again, with the nice beat, in light of all the selling that could happen, that might be the perfect opportunity to get the big players involved to pick that up, quietly, if you will, or not chasing it on the way up. And really, this level is crucial, $5, $6. It's been support for so long. If we can hold there and start reversing up, I think Beach Energy is one to watch, especially as, it's really been stuck in this range between 173 and 106 or 107. So you've got a really defined target in terms of upside. And given we're on the lower end of that range, then there's a real opportunity at this lower end for it to at least, have a target around that top end of that range to provide some really nice, even short-term opportunities if it doesn't want to break on through and give a really nice expansion. But I think where it's positioned, quite interesting right now, but it's got to hold that $6, $5 level. Thoughts?
Yeah, definitely. This one's looking very interesting. It's quite a volatile one, probably not for everyone. If you haven't had a look at our courses, I highly recommend that you do at least have some form of technical analysis skills before trading something like this. But the opportunity, if you do get it right, is huge. I mean, you just highlighted that $1 level and that range that it's been range bound by. And if you were able to get a rule and an entry around that level, just to that upper range, you've got 60%. So that is a nice return there. For a more conservative trader, you could put simply just some type of trend line or momentum line on that weekly there. If it breaks above it, then you're good. We do have that gap that it needs to fill. When that fills the gap, well, that's going to be the $1 million question. But there is a gap nonetheless. So this one I actually do quite like. Gas is quite in favor now. We do know that it's the time for gas to shine. It's been favored as an energy source more and more. We're getting away from coal. And uranium is taking a little bit to come back online. So gas is going to be in favor. So I do quite like this one.
Yeah, fantastic. Now, on your point in terms of getting educated, we do have this book, which is How to Beat the Managed Funds by 20%. It's Dale's book. It's free. You just have to pay the shipping. The link is in the description below in this YouTube video. It's got trend lines in there. It's got a whole bunch of portfolio construction in there. It is up to date as well. So go and check it out if you do want a nice introduction into all of the things we do and teach here. Now, time to move on to our next stock, which is APA Group. Now, this one, Pedro, is a pure defensive play, obviously in infrastructure there for the pipes. And I mean, this one, when you want to talk about pure defense, given, if the market does go for a nice little dip, now we want to talk about protecting that portfolio. Go and take a look at this chart of APA now that I'm about to show you. And the first thing I want to show is the, correlation. I've put on the Ordinaries Index, which is this brown line. And I wanted to show on the weekly chart just how nice the inverse correlation is. You can see as the Ordinaries is rising, APA is falling. But then we get this period through here where the Ordinaries took a dip back in February. And look what happened with APA. It did absolutely the opposite. It started rising. And, again, we can see when the market starts to dip throughout this period, APA goes for a nice run. So, when you're talking about pure defensive, this is one of them. And the way it's lining up on this weekly chart through here, it's giving one of those classical patterns that our students would know that we do teach, which is leaning slightly bullish for now. It's still got to get going and get moving, but that is an interesting sign what is happening right here. And the fact that it's holding above $8.22, which is a really important level, that also gives it a nice little tick, broken through a long-term momentum line. Even though it's had this really strong run up since 2025 February, it's holding. Ideally, it would have been nice to see a bit of a pullback, but sometimes an accumulation instead of a pullback is also a very promising sign. And we're holding the 822 to me again, which is the most important thing. I think a run up to that 971 once we break these highs here in June 2025 could spark that run up to 960, 667, potentially providing a bit of opportunity and adding a bit of protection to that portfolio if the market, as it's looking, does take a bit of a dive. What are your thoughts, Pedro?
Yeah, and what's interesting about all these three stocks is that not only do they offer capital growth potential, all three of them are paying dividends. So, talk about protecting your capital. You're also getting that dividend as an added bonus as you're holding these stocks. And that's something key to look out for, especially when you're looking for opportunities around these types of markets. You really, that adds a little bit of a spice to the trade. Now, going to the weekly and the monthly chart here, that pattern that you've outlined is looking very nice. I do agree that it's quite interesting. And it also highlights the point that you need to know how the stocks behave in a downtrend and how they behave in an uptrend. So this is exhibiting typical behavior of how the stock performs in an uptrend. Now, I'll just hide out that the All Ords overlay. And you can see that even back here in 2022, it exhibited a similar pattern. It was a little bit of a breather before the stock took off again. And then going back here in 2019, similar pattern, had a bit of a breather, and then it continues on. So those are the types of patterns and things that traders should be looking out for, and that we teach traders how to look out for and how to confirm them, because they're not all equal. Like, for example, this is just a little bit of a of a pullback before the stock continues on. So you really need to know how to identify the patterns, and then having a look at how they exhibit in both a downtrend and an uptrend. And this one is looking very very interesting, I would say, and quite possibly bullish.
Yeah. If you want more hot stock tips, check out our video, 3 trending ASX stocks to buy in August.